And since 2022, when the Inflation Reduction Act was signed into law in the United States, many companies have really solidified their CapEx plans, whether it be energy or water or domestic manufacturing. So the upside from here is tremendous. It's been estimated to be anywhere from $1 to $2 trillion of capital infused into the sustainable economy. And those are the companies that we're looking to invest in who are benefiting from that infusion.
Okay, so let's talk about that with ideas. Darling Ingredients is one that is in this fund. What is the kind of sustainable angle? What's the growth angle?
Well, Darling uses a byproduct from agriculture, so waste to energy, and they are manufacturing now something referred to as sustainable aviation fuel, SAF. And that is also a tax credit in the Inflation Reduction Act that is supporting the build out of SAF. And the capacity of SAF is de minimis compared to the demand. I was just visiting with an airline, and all the airlines have stated ambitious emissions reductions goals, and they're going to meet them with the use of SAF. So that is a huge growth market for Darling and the entire energy ag nexus.
So I think of it as more of you're making products for the restaurant sector. So is this kind of a pivot or a new layer?
Oh no, that's interesting. So they capture waste from the restaurant sector.
Okay.
They're
and
not
they
making
use that.
products for the restaurant sector. Yeah, so food waste, animal waste, any field waste can go into the making of a sustainable aviation fuel, which in the past, airlines were using renewable diesel to fill that gap. But SAF products will command a much larger premium than renewable diesel, which is typically made from soybean oil extracts. And so now we're seeing a broader swath of the agricultural community being able to provide renewable fuels to the aviation industry.
Why is it down so much over the last year?
So the CapEx that they've been engaging in did require some debt, and those interest rate, basically in the last July, the interest rate kind of hangover hit the sector, and not only Darling, but the entire renewable sector, where people were seeing forward-looking projects being financed at a higher interest rate. So that kind of took the shine off that apple. But this is a much longer-term play as interest rates have stabilized, if not even being more reduced this year. The capacity to fill the demand by a firm like Darling is going to be a tremendous opportunity.
The next one has a chart that's done very well over the last year, certainly in 2024. Hannon Armstrong Sustainable Infrastructure Capital, and it provides financing. Right.
Think of Hannon as the public equity version of a renewable energy private equity infrastructure fund, because they're financing multiple projects. Many investors aren't able to access private equity funds, but if they can access the actual opportunity of renewable energy efficiency, both in front of the meter and behind the meter, and the fuel and infrastructure industry that we just talked about with Darling. Hannon is financing all of that, and they have a very strong balance sheet, and they have done very well. And also this year, as of January 1st, they no longer are a real estate investment trust. So now a lot of the income that was passed on to investors through dividends are now going to be reinvested as corporate equity. And so that's really a catalyst for the shares of equity of the company.
And your last one, Xylem. What do you like there?
Xylem is a water utility equipment manufacturer. So think about your standard water utility. You would have individuals come out and look at your meter and then charge you how much that would cost. Xylem has equipment that utilities are buying to automate and digitize all that information. But this is one water system at a time, and there are thousands of water systems, right? And so this transformation of the water utility into a more modern, automated, digitized, monitored system is where Xylem is really doing very well, because they've been a utility in the past. They acquired a company called Evoqua. Their senior management has been involved in the acquisition and is really deploying this technology, across the country into the water utilities.
It's trading at an all-time high. How much more upside do you think it has?
Well, water utilities it's almost an endless kind of evolution, as water is really going to be the oil of our lifetime, of our millennium, because water is a scarce resource and needs to be managed and monitored very meticulously, and it hasn't been heretofore. So while the company has done really well, it could really go another. I'd hate to put a number on it, but it has substantial growth. And you also have to think about, in the short term versus the long term. You look at some of the companies, and I wanted to mention this. You look at some of the, data center, AI companies today, right? Well, everyone's saying, well, how much further can this go? But if you look at the trajectory of some of the hyperscaler companies who are now part of the AI revolution, they grew from 1980 till today at tremendous multiples. So in terms of water and the digitization of water, we're in very early innings here. So you might want to zoom out a little bit and see, like, we're very early in the curve, even though it looks like it's gone a lot right very recently. And that brings me to one final point I wanted to make, Amber, which is there is a lot of conversation about data centers and AI. And that's awesome. And that has been, it's going to be great across the entire economy. But those data centers need to be powered, and they need water. And that's the companies we're investing in are behind the infrastructure. We're not investing in the large mega cap AI companies, but we're investing in the infrastructure that's going to be able to allow that to happen.